When will the Great Resignation end? That's a question that we've been thinking a lot about at Daggerfinn on a few different levels. One, we need the information, of course, to be able to accurately and thoroughly guide clients through what will be the next 18, 24, 36 months of labor markets and job market disruption. And what does that mean from a labor shortage standpoint? Any organization that's done any hiring over the last 18 to 24 months, since really the start of the COVID pandemic, will have seen disruption at some level to their time to hire, to their cost per hire, how easy it is to attract the level of talent that they need. Some organizations have had it easier than others, and some organizations on the flip side of that coin have had it harder than others. And so, of course, trying to understand when this phenomenon around the Great Resignation, as some people call it, is important at that level. On another level, we have a client right now who is going through what is a media push that we're leading. And Q1 is their most important time of the year as it relates to getting the word out. This is when their business gets the most press coverage. And so what we did is we put together a very comprehensive survey trying to get data points around how people are feeling about their jobs in 2022 and contrasting that with what we know about the dynamics around the Great Resignation in 2020 and 2021. And some of the findings are pretty interesting. So I'm not going to divulge the findings right now, but it's really informed a lot of the thoughts around how we feel about the Great Resignation going forward, and then, of course, trying to come up with when it will end. And the overarching kind of thought right now that we have is that the more we look into it, the Great Resignation as an idea is probably the wrong terminology for what we're seeing. The way that the labor shortage has affected the market or businesses at different levels of the economy has been very different. So, and when you dive down a little bit, it's really kind of wage level and kind of the technicality or the skill probably of the roles at play. And so there's definitely been a lot of movement throughout the workforce, at all levels. But we have clients that work in high-level headhunting and high-level executive search who this has been an absolute boon time for them the last 18 months. And that's because companies that are looking for executives and looking for management staff are in desperate need for workers because of the uptick in demand and on the consumer side over the last 18 months. So they've had to upskill, upgrade, and staff up to get to that. And it hasn't been so difficult at the kind of higher levels of organizations to find talent. And what you're seeing is not a Great Resignation. You're seeing kind of a realignment of the workforce where people are moving into roles where that align maybe a little bit more with the flexibility that they're looking for in terms of their balance of what they want work life to look like. Some of them, of course, are going for more money. We have inflation right now, and there's a lot of news around lately the 7% that it's ticked up to. So people are chasing higher paychecks, higher wages. And so at the top end of organizations, it hasn't been so much a Great Resignation. It's been more of a reshuffling or realignment. Where you're really seeing kind of the activity that looks like a Great Resignation is at the kind of lower wage and low skill work, and to really kind of drive that point home, where we've seen the most movement or where we've seen the most quits, so to speak, has been in leisure and hospitality. I mean, it's almost double nearly every other, the second closest industry, which is services and professional services, where, you can see where people are maybe moving for different reasons. But leisure and hospitality is very customer-centric. It's customer-facing. It's frontline work. And that's where we're seeing a lot of the Great Resignation. And, for the most part, a lot of those roles that make up that industry are lower wages. And that's where we're seeing a lot of the push and pull of organizations raising their wage floor, putting price pressures on different organizations, and as a result, people are resigning from those roles and maybe taking on other roles. So that's at the level, I think, of the economy where you're seeing what looks the most like a great resignation. But for the most part, people aren't really actually resigning and then just leaving the workforce. That's kind of, that dynamic is we've moved on from that for the most part. In prior episodes, we've talked about how there are certain demographics that are really triggering what is the labor shortage. I mean, you've got the people who have pulled forward retirement. They've, so to speak, resigned and left the workforce, but they've, the older workers who have pulled forward retirement because the markets have been so good to them, and then they, have the cash or the financial stability to do that. You've also got people who have passed away from COVID, people who are sick and haven't been able to return to work. Another area is younger workers who are living at home. I think I saw a stat recently where something like nearly half of all 18 to 29-year-olds are still living at home. And with that as the foundation, if you don't have to pay rent or a mortgage, parents may be saying, look, like the world is still pretty dangerous out there in terms of being able to get sick and stuff like that. So just don't go work. We're pushing careers off a little bit through as we try to navigate this COVID situation. And with younger workers, I think you're seeing what looks a little bit more like the Great Resignation in terms of people just leaving the workforce completely, albeit for probably a short period of time. I mean, as soon as we can figure out what we're doing around the coronavirus globally and stabilize that effect, I think you'll see these younger workers come back. And so I say all that to kind of highlight that the Great Resignation isn't happening across the entire economy. At higher ends of organizations, you're seeing slowing, I'd say, realignment. There's still definitely high demand for organizations who need great talent, and that's always going to be in play. And so there's going to be movement. But where we're seeing the Great Resignation really be a little bit more stubborn and really stick is at the low wage work, where people are going inevitably to pursue higher wages, right? If you're making whatever it is, $16 an hour, I can find a reason, and individuals who are working in those roles can definitely find a reason why it might be better to go get a $17 an hour job or an $18 an hour job. And so that's where the biggest kind of churn and turmoil, so to speak, in the labor markets is happening. And that's hard to predict from a when will the Great Resignation end standpoint, how long that's going to last. You can kind of see at the top end of organizations where the Great Resignation is definitely coming to an end. The Great Realignment, a better term for it probably, is coming to an end, to where we're going to start to see stability. Some of the data that we did for one of our clients around that area is very interesting with regard to what people are looking for in 2022. It looks vastly different in terms of priorities across benefits, across wages, across things like that than it has been the last 2 years, which signals some sort of change in mindset that we're seeing going into 2022. But if you look at where the most volatility is in the markets, at the low wage work and people fighting for higher wages and things like that, that's where we're going to need to try and figure out really when will that end as a phenomenon. That's going to be tricky because of that delta between the number of open jobs and the labor participation rate. I think we haven't seen that close in the data recently. And so until we get a clear picture on how we can get low wage workers to be loyal to the roles that they are and reduce kind of the turnover and churn at that level of the workforce, of the economy, we're not going to be able to project out when this is going to end. And if that's a function of making, higher wages or some sort of benefit that we haven't invented yet, to where people are like, oh, that's exactly what I'm looking for, I think we're still going to see this drag out a little bit longer as we go forward. So when the Great Resignation will end, difficult to say, but it's happening at different paces across the entire economy. And I posit that at the top end of organizations, it's already over, so to speak. That phenomenon, at least that you could tack on that Great Resignation label. What you're seeing now is just kind of the the natural turnover and the natural movement of talent, and what the effects of increasing demand for products and services. The important part to look at is at the low wage work, and how we can get that a little bit more stable in the long run.